Hello guys, welcome to my YouTube channel. So today we have booked 17,800 rupees. So if you want, I'll refresh this. So you see the order book. I have executed only one order, that is call position 55,900 strike price. So 600 quantity at 598 I have executed and 628 have come out of the market guys. So hardly 10 minutes here. So at 9:24 the order is punched. At 9:33 we have exited the position. So I'll tell you the logic. Logic is very simple, not very complex. Because the bias has been bullish lately for me. Of course, it's a mixed bias, but not clear cut bias. But then you see, you see, market has opened kind of inside in this range. You see this range. If you uh, extend from this top to this bottom, the market is inside. So either if it wants to continue, the highest probability would be sweeping some sort of liquidities and then going towards the upside. Only that case, in that case, we might focus on the bullish trades. Otherwise, if market simply goes towards the upside by just creating the order flow towards the bullish side, it's not useful for me, especially to someone who is trading ICT. We need to see some sort of range, we need to see some sort of manipulation, and then we need to see shift in order flow, and then it hits the TP or towards the direction that it goes. Now, what has happened, market has, in the 15 minutes candle itself, market has generated this huge candle. You see the whole tail here. There is a reason for that, why market has generated that huge tail. Because you see, I have been always telling you that you know if there is a graph like this, and if you draw 50% of the graph, this is called premium zone, this is called discount zone. You always have to, if you want to sell, if market is here, if you want to sell and aim towards these lows, you always have to look for point of interest in premium zone, and then look for sells. At the same thing, if market is here, something like that, and if you want to buy, don't buy here, you buy if market comes to that discount level, and if it hits any sort of point of interest from then, if you get any sort of confirmation, then you could long here. This is discount, this is premium zone. And the same way, if you pull this Fibonacci tool from this top to bottom, you see this 0.5 level, right? One second, yeah, you see this 0.5 level, right? In this 0.5 level, the highest probability case point of interest would be, the first one is this fair value gap, the second one is this order block. These are the two major point of interest for someone who want a short. And there is this inverse fair value gap also, there is this inverse volume gap also. So you would have to wait and see for which market reacts, and you need to go to the intermediate time frames for the confirmation as well. So in this case today, what market it is, it has simply taken resistance from this, from this fair value gap. So you see, market has just tapped into this fair value premium zoom ka fair value gap, and just gave this snap. And in 15 minutes, I know that my bias is bullish towards the buy side. So what I did is, once the liquidity, you see this swing low, once this liquidity has been swept, that is where I have executed my order somewhere here. I have placed my stops here, and I have rode it till my target in the premium chart. I'll show you the premium chart as well. Yeah, you see in the premium chart, this was like a little tricky for me, because in the premium chart, market did not take out the low of this swing, it just has taken out the low of this, small swing that you see over here. So it has taken out and then given this huge retracement, because for some reason I felt, or maybe due to my experience, that the that market doesn't behave like this. There should be a strong reason for the market to form such a huge wick. So that is why I thought there should be some sort of bullishness. This could be a manipulation bar. No, even in 6 minutes you cannot see it. 1 minute, no. See, even in 1 minute also, it has formed this huge wick. So, all these institutional orders, these are not manually punched orders. These are all institutional orders. Once market has tapped into it, it has immediately crashed down. So this is an institutional order, and as we are bullish, I know that the market will, indicate this as a possible manipulation, and can market go up. But then if it can go up from here, I'm not sure. So I have just taken a position here. You see, I have taken a position here, 9 39. 23, I guess. Sorry, guys. I keep forgetting always. So at 9:24, I've executed this. You know, yeah, 15 minutes chart. So 9:24 means in the first bar itself, I have executed the order. In the second bar, my target has been hit. I have kept the limit order till 6:28, I guess. It has gone up till 6:48. No, 6:28. The limit has been set to 6:28, but it has gone to 6:48. But that's fine. But then market snapped back again. It has come down, taken out this swing low, and now it's giving some sort of bullishness. This is now it is tricky for me. Now it is tricky because this is not the typical buying scenario that I would like to see. I mean, where would I like to see is see we have this clear cut, you know, fair value gap lying here. If market comes here and gives some sort of confirmation here, we might ride it till the highs. At least for now. But then if you see in the bank nifty chart, there are these equal lows, liquidity pool. So we should see how market is gonna react to these levels, and we should see if otherwise, it has formed this huge week. Market can come to 50% of this week, you know, and this whole wick acts as a rejection block. So the market might take resistance from this rejection block as well. So I don't have that. Okay. So market might take the resistance from rejection block and then can fall down. At least take resistance at the 50% area and then can fall down. So we are not sure. As of now, I'm no more interested in the markets because this is all about bank nifty, guys. But if you come to nifty, we are yet to see any sort of confirmation coming out of this place. You know, um, this huge momentum, and then market has accumulated here for some time, and then it has given this manipulation. But so what should be the ideal case scenario if it market really wanna go up and target these highs? So what should be the ideal scenario for me is like market should shift the order flow and then take out one swing low at least, and then give some sort of order flow change again so that I can target to these highs. This would be the ideal buying scenario for me. Otherwise, there is no buying scenario whatsoever, because just based on this bar we cannot go long, because if you go long here it would be the same case scenario that I have executed yesterday, because I have longed somewhere here in the tops and then I have held all through. Because you don't know whether market will react to this breaker blocks. We are not sure. So that is it for now, guys. From my side, there is nothing much else in the markets for me to do. So even if we analyze in the daily chart, it's a inside candle, right? You know, it's an inside candle. Now it gets tricky. At least if it had taken out the highs of previous day and then given some sort of signal, while taking out the highs, if it had formed an accumulation and manipulation and distribution, we would have considered this as a possible expansion towards the downside, at least for temporary momentum. Because we have this volume gap also, so it might come tap into it and close somewhere above, and the next Wednesday it might go on something like that. But if it closes inside, it gets little tricky, because all we are focusing on is expansion from a point A. Market has to manipulate something, and then it has to travel to point B by manipulating, by expanding. So we are looking for such ideal case scenarios: accumulation, manipulation, and distribution. So we need this distribution, we need this expansion. So do you think, are you expecting the market to expand till this volume gaps, or you think the market is going to stay inside the range, or you think this whole thing is a manipulation and it's going to expand here? That is what we are yet to see in the markets again. So even if we draw Fibonacci levels from this swing to this swing high, so we are not even inside the premium zone also. So we might see some sort of manipulation again, and there is this discount level fair value gap here. You see this fair value gap. So what I'm saying is possible case scenario, guys, because nobody knows for 100% that where market is going to go from now. All we could do is form a bias, stick to the plan, and then execute it with proper risk management. That's it, and nothing else. So that's it from my side, guys. So if you have any questions or doubts, comment below. So let me know what else you want to see from my side. So thank you for staying all through. See you guys. See you on the next one.